Trade war tensions are only heating up. Let's get in Michael Every then, who joins in to assess the situation. And Michael, what a difference 1 month can make. We were just talking about headway being made with the US-China trade tariff, and now it's one side retaliating another. The dragon as well has flared up. How much of an event risk is this, and do you think that this is going to really be the course of action for some time now?
Well, I think it's a huge event risk. I have to say here at Rabo, it doesn't surprise us because we never bought into all the optimism that the markets were showing up until now, where everyone was saying, well, this trade deal is going to be great, isn't it? When will it be signed, etc., etc. For the very simple reason that we never believed China was actually capable of delivering what the US is demanding. They can pretend they are, and in fact, the most optimistic we ever got was in the expectation that just perhaps Trump would accept a deal whereby he knew China didn't mean it, just to get him through to the next election, at which point he would then crack down, more aggressively again. It appears that that scenario of can kicking has now been pushed to the sidelines, and we do have a more aggressive confrontation because, as I said, China will simply not stop being China, and the US is frankly not going to put up with it anymore. And so a confrontation on multiple fronts, whether it's trade, whether it's more broadly economic, whether it's actually geopolitical, is absolutely baked into the cake, and I think will be the new normal going forward for year after year after year.
Michael, now the Chinese and Americans are fighting, but the world will suffer. So what happens to the global, what happens to global growth? What happens to equities? Are we looking at a complete reboot at asset classes because of this trade war?
Well, I think you have to think very carefully about what you're looking at. I mean, if we see the entire global economy swept up in this, and to a degree, I think that's going to be inevitable, given you're talking about the number one and number two economy in the world. There are both enormous risks and huge opportunities. In the near term, you have to say that you can't make a positive argument for equities on that basis, because particularly large blue chips that have got these very, very complex supply chains that run from China to the US, they're going to get walloped. I'm just gobsmacked at how complacent the CEOs have been for month after month after month, as the rumblings of this have been building up, and analysts, including myself, have been saying this is the inevitable end game. But oh no, these guys who are paid millions of dollars know so much better than me and have refused to actually shift their supply chains. So those kind of firms, yes, they're going to take a hit. But you can see plenty of opportunities for more localization, for a shift, obviously, back into bonds as a risk-off knee-jerk response where bond yields go lower, and for some emerging markets to be severely punished and others to be hugely rewarded as they basically win in a zero-sum game versus China. So it's not all bad news unless you buy into the Panglossian globalist view of basically free markets, free trade from everyone together forever, la la la, happy clappy, sing kumbaya round the campfire. If you don't go down that route, then there's a lot of money to be made.
Appreciate your time, and thank you for a quick take.